has more.
Balancing between growth and efforts to cool off price rise, India's economic growth is expected to moderate to under 5% for the October to December quarter. And this economic growth has also remained largely uneven, according to analysts. While on one hand, agriculture is expected to receive a boost with an increase in acreage of the winter crops, services sector, particularly hospitality and travel, have seen festive season ring in positives. But then, pressures of high cost of raw materials globally will continue to keep the manufacturing sector constrained. Consumption demand is wavering too. For rural India, where more than two-thirds of Indians live, a rise in sale of tractors and two-wheelers is showing some buoyancy in demand. But then in urban India, where pent-up demand was keeping it higher, that is seen to be moderating now. India's efforts on inflation control is also pushing the balance of risk on the side of growth. Remember, India's central bank has raised interest rates by 250 basis points in 2022. Expectation is they could increase it further. And this continued increase in interest rates has raised the cost of borrowing and put pressure even on household budgets. Add to that, a slowing global economy is hurting India's export potential and is expected to dent growth even going forward. In fact, one of India's Monetary Policy Committee members has called this economic growth very fragile, saying that it may fall short of what the country needs to meet the aspirations of the growing workforce. But despite that unevenness, India continues to be brighter than most economies that are headed into a recession, according to both the World Bank and the International Monetary Fund. Remember, India's central bank has in fact slashed India's growth rate to 6.8% for the current financial year ending March 2023.